Today is Monday, August 12th, and I'm here with this week's update on what may impact the direction of mortgage interest rates. Optimal Blue reports the 30-year fixed average 6.5% as of Friday, August 9th, 2024. So, of course, this is lagging data. It's a couple of days old, but we've been, in a better rate range than we have been for quite a while. So it's nice to see rates a bit lower. And please do remember that the Optimal Blue Index is an average from about 35% of the mortgage transactions or lenders that use Optimal Blue for locking in loans. And since it is an average, we don't know how many points are paid for this, or if there aren't any points being paid, what a person's credit score, what the loan to value is, all these different factors that may impact a person's mortgage interest rate. So if you would like a rate that is current and based on your personal financial scenarios, please reach out to me. I am happy to help you with that. We have inflation and housing data this week, tomorrow's PPI report, which measures wholesale inflation, and Wednesday's CPI report measures inflation that's felt by consumers. So if these reports come in as expected or come in better than expected, we'll see mortgage rates improve. And better than expected meaning that we see inflation's cooling. If we see inflation coming in hotter, then we'll see mortgage rates nudge up a bit. So we'll be watching these reports very carefully. As I prepare this around 11:30 saddle time, you can see a series of these small red candlesticks following the big green candlestick, which was Friday's jobs report, trending down. Each of those dashes represents a day and how much mortgage-backed securities have moved in that day. So following those red candlesticks, we have a couple of green ones, which we like that. And right now we are up about 12 basis points. And again, it looks like we're kind of like finding a level or a floor here at around 6.5%. And so we'll see what tomorrow and Wednesday's inflation reports bring and how this will impact this chart. Should be interesting. In the spotlight today, I want to talk about buyers agents commissions. This week on August 17th, the NAR ruling will go into effect, which makes it to where the buyer's agent's commissions basically is separated from the selling agent's commissions. And I'm really kind of simplifying this, but you may find yourself, if you are a home buyer, in a situation where the seller is not going to want to offer to pay for the buyer's agent's commission. Historically, the commission's been wrapped up and paid entirely by the seller. And so, like, let's say if it was 6%, then the seller would pay the 6% commission to sell their home, and then the agents would split that in half, or whatever their agreement is, and with each party getting 3%. Well, now it's a little bit different. Buyer's agents are supposed to have a written agreement with their buyers, which we've been doing this in Washington State since the beginning of this year. And it's going to get pretty interesting. So this is a scenario to show you how a buyer's agent can be paid in the event that you are going to make an offer and the seller is refusing to pay for the buyer side of the commission. So we have here, and by the way, these rates are expired. This is from June, and this is just to illustrate how this can work. This first column here is the list price, and so let's say it's $800,000. They're doing 20% down. And this is what the payment and funds for closing were to look like. Now, in the second column, let's say the buyer's agent is going to be paid 2.5%. We're going to add that as a closing cost for the buyer to pay. This would be if the seller is like saying, nope, I don't want to pay that. So then the buyer now has to come in with that additional amount, and now they're bringing in about $20,000 more for funds for closing. Instead, what could happen is that you could offer $20,000 more, add it to the sales price so that the cost is offset for the seller. And in my opinion, this is kind of how it's been done all along, is that the commission is baked into the sales price. So adding that $20,000 to the sales price only brings the payment up slightly, and it reduces the fund for closing compared to the no commission being offered or the buyer having to pay like a closing cost. So this is a win-win for the seller and for the buyer, and of course for the buyer's agent too. The last column shows if the appraisal were to come in at $800,000 at the list price, what could be done to help save this deal would be to just add private mortgage insurance to it, which just slightly increases the borrower's payment by about $50 and still keeps their funds for closing down. So it's all going to depend on what a borrower's financial situation is or home buyer's financial situation. But the bottom line is that there are plans that can be deployed if you have a strategy for making an offer on your next home. And I'm happy to help you with that. If you're thinking about buying, selling, refinancing, or remodeling your home, maybe adding an accessory dwelling unit, please reach out to me. I am happy to help you. I hope you have a great week, and I hope to talk to you soon. Take care. Bye-bye.